Good morning from Los Angeles. Welcome to Trading with Sergio every Monday and Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. You guys may hear a helicopter overhead. I don't know what's going on outside. I'm sure there is something going on, but I'm not concerned with that. I have my protection with me. So if I have to leave the live stream, you guys know something's going on. Welcome. This is Wednesday. It's Trading with Sergio, and I'm doing this on YouTube, X, and I'm using StreamYard. So StreamYard changed a whole bunch of things. Now I think I'm broadcasting vertically as well. So I'm seeing myself on two different screens. So this is the first time we're doing this. I'll get used to it. I'm not sure. So not only it's in horizontal mode, I think, I'm not sure, but it's also on the vertical mode. So like people on their cell phones can see what I'm doing. Like I can see myself on the left side on the vertical screen, but you guys don't see the background. So on the horizontal one on YouTube, I think you guys see the background. So I'm not sure. Okay, so as you guys know, I have changed. I have 3 hats now. I'm gonna get actual hats done, but these are like other company hats. So I have a black hat as I'm wearing today. I have a red hat, and I have a green hat. Definitely not a green hat day for what I'm holding. But why am I wearing the black hat? It's because the Dow is up another 400, but Nasdaq and S&P are down. So there has been this. Literally, there has been this bear market going on under the surface that nobody talks about. Well, some people are talking about it, but the ex-YOLOers are always, this is great, and going up and selling puts and selling calls, and I'm like, yeah, whatever. Yeah, today I'm black hat because market's mixed again. If you're in the Dow 30, you're doing fine. If you're in the S&P or the Nasdaq, you're eating it. Specifically, if you're in some of these AI names, right? So AI is getting questioned, right? The validity, not just the validity, but the valuation of it is getting questioned. SoftBank exiting all of their NVIDIA holdings to the tune of, I don't know, 5-6 billion. That was getting questioned. Michael Berry's bearish position is getting questioned. He supposedly has some massive news that he's going to break out on November 25th. He kind of hinted what it is, though, and we'll see. I don't know. Well, at least we're getting some questions now about all of this. How is this going to turn out? What does it mean for society in general? But what does it mean for these companies, which are being valued for perfection plus to Mars and back? So yeah, this is interesting times we live in. Under the surface, there is a bear market going on. So if you don't own the indexes and if you own some stocks and you're eating it, come to my club because that's where I'm at. Some of the small cap, mid cap is getting smashed, even in some big names, right? So we'll talk about Oracle. After that massive earnings gap up day, stock is basically is down about 40% from that high. So even, there's no protection, folks, okay? There are poster childs all over the place. You know, Oracle opening up at 340, going to trillion market cap, and now losing close to 400 billion in market cap. I mean, these are not small companies, and they're moving $100, right? And if you look at some of the AI circle jerk names, AMD is continuing. NVIDIA kind of looks shaky. Palantir is getting hit a little bit today, some more. So a lot of cross currents, but then over the past 6 weeks or so, under the surface, okay, not the indexes. Indexes are still 2-3%, maybe less from their all-time highs. But what do we have is that advanced decline line, secondary stocks, even within the S&P 500, and these are not small companies, right? So within the S&P 500, about 450 of them are underperforming. And in fact, they're in downtrends. In fact, they're under their 50 EMAs. So my point in all of this is there's two-sided marketplace. If you're in indexes, you don't feel this pain, but if you're in some of the rest of the, let's say 450 to 470 of the S&P 500 companies, you're not doing well. And then there are some companies who are just horribly horrible, actually, such as UPSs and Lululemons and things like that. Again, these are not small companies, but they're just getting smashed. But I know the market's bifurcated, or I know market's split when I'm looking at my watch list. I have a watch list of, let's say, 400 stocks, right? And when I look at my watch list, if the market's doing well, advanced decline line doing well, indexes are going up, and the tide is lifting all boats out of 400, and those are stocks that I have picked that I think are going to outperform, right? Because there's no reason to be in underperforming stuff or watching it anyway. But what's been happening last 6 weeks is that my watch list has been consistently red, the majority of it, while only 5, 8, 10, 20 names out of 400 are green. And those are the ones that are pushing the indexes up. And people are in this false sense of security that, oh, market's only, at an all-time high. Yeah, but do you hold a market, right? Most people hold individual stocks, and those are getting killed, especially now that the AI circle jerk is getting questioned, this power generators. We know what they are. I've been talking about these for, I don't know, months now, the quantum computing stocks and Oklos. Again, they're still up tremendously from where they were a year ago or 6, 8 months ago. But if you look at from their recent highs, they're down 40, 50, 60% in some cases. And if you didn't get caught, now you're a bag holder. And now, all the calls you sell against those positions are not going to save your butt. And that's why I had a video that I got some pushback on, saying selling calls is not what people make it out to be. It's not. Because when you sell, again, look at Meta, okay? I mean, there's many names. Look at Duolingo and last week's casualties. Where would you be if you sold puts? I mean, Meta was 750, now we're down to 620, and a lot of people had sold puts probably saying, I love Meta at 700 if it gets there. 10% correction, or 680, let's say, right? Where is it at? It's 620 or lower. So again, selling puts, selling calls is wonderful, but it's not free money. It's not what it is that people talk about on X constantly. Oh, look at this premium I took in, look at that premium. Okay, here's a perfect example. If you a few days before Meta earnings, okay, because you looked at the juiced up IV and stock is 755, you go, okay, for Friday, we're going out 3 days, I'm going to sell some puts. They're very, juicy. There's $3, $4. Okay, cool, great. Okay, you sold the puts. Earnings come out. Stock gets smashed. Next day, stock is 650, 660. The puts you sold for $3, $4 are $40 now. There goes your account. Bye-bye. See you later. Unless you have a big enough account. Or you're going to take assignment. Well, most people sell puts not because they want to take assignment, and then they'll say, yeah, well, I wanted to own this anyway. I'm like, no, you're down 10x on the put that you just sold. Your little cash grab turned into, a long-term investing adventure now. And now stock is 620. Okay, let's say you took assignment at 700. Now you're down $80 already on the stock. And a lot of people are so used to the market V-bottoming and then just saving their ass every single time. But then there are these occasions that you're just going to get slammed. And what do you do now, right? So again, selling puts, selling calls, selling premium is great. Or, a lot of people go, okay, I got a sign, I'm going to sell a covered call now. Okay, you turn around and sold an aggressive covered call at 700 after you got assigned Meta. You took in, I don't know, you went out 30 days and took in $10, $15. Okay, great. How's that going to protect you when the stock is 620, down another $80 from your point of purchase? So all of this is made out to be, or made out look, it looks like on X, people are like, I sell puts, I do this, then I sell calls, I wheel this. There's no wheeling. If a market's in a bear market, there's no wheeling, folks. Wheeling is going to get you to the poorhouse in a bear market. And market's not even, indexes are not in a bear market, but I definitely am calling a bear market on the 460 of the S&P 500 stocks. I mean, it's night and day. So my point in all of this is, is be careful out there, buyer beware. And then obviously now we have the, the BMNR craze going on, Tom Lee's dad, digital asset treasury company that's accumulating ETH like it's going out of style. So, okay, a lot of people are stuck on that now. But then I see these fools, and I'm going to call them fools with all due respect. In fact, you know what? Let me put the link up. So if you guys want to join the live, you're more than welcome to do so. We can discuss all this. I mean, this is truth here. I'm not sugarcoating anything. I'm calling it the way I see it. If you disagree, you disagree. So, all these folks, like a BMNR is going to break out and do this, and they do lines and chopsticks, and, I'm going like, what are you guys doing? BMNR is not going anywhere. BMNR is not even a common, well, it's a common stock, obviously, but it's not like a regular company. It's a debt. The only thing they have is net asset value, which is the ETH holdings. I get it. I get the whole premise that ETH is going to be Wall Street one day. Everything is going to be on the blockchain. Blah 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 blah. I get that. But then when these folks go like, "Oh, BMNR, if you thought it was great at 60, it's great at 50, it's great at 40. Now we're at 30." I'm like, no, man. If ETH goes to 2,500, BMNR is going to be $25. But then what they do is they do technical analysis on BMNR. I go, no, go do technical analysis on ETH. If you do that and then you see the downtrend, then maybe you shouldn't be, going so crazy about BMNR, because BMNR on its own is not going to go anywhere. Unlike a regular company that has earnings, right? That has cash flow, that has all these things that you can analyze. But on these DATs, there is nothing. Like I'm stuck in one. I'm stuck to the tune of 30 grand in one. And I did defined downside risk trades. And I'm still stuck. Imagine if I didn't do defined downside risk trades. Where would I be? So the point again, buyer beware, understand what you're buying. Don't just go read X or YouTube or whatever. Some of these, whatevers they are. I mean, they call themselves gurus or whatever. And follow them, because it's just, you're going to get hurt. If you don't understand what a DAT is, if you don't understand what net asset value is, if you don't understand MNAV, which is multiple net asset value or market cap to net asset value, do not be involved. More importantly, if you are not long-term bullish on Bitcoin, Ethereum, Solana, do not be involved in that. You're just going to be in pain. Now, what you're going to do is you're going to buy, you're going to sell calls, try to lower your cost basis. I get all that because they have juicy premiums. Maybe that'll save your ass a little bit more than some other ones. But who's the poster child in all of this? Strategy. Now I see a lot of people who are upset to Michael Saylor. Michael Saylor did exactly what he said he was going to do. Michael Saylor didn't lie. Michael Saylor is not doing anything. But people bought, MSTR at 2.2 MNAV when it was $500 a share. And now MNAV is down to 1.18, 1.2, maybe less. The stock is continuously going lower, right? When Bitcoin was at 110,000, or exactly where it's at now, 104, 5,000, BMNR was 500. I mean, MSTR was 500. Well, today we're at 225, down more than 50%. So in all of this, all I'm saying is buyer beware, understand what you're buying, do your own due diligence. Don't listen to some fool on X because they're talking their book. Talking your book means nothing. Drawing lines on charts means nothing. Nothing. Absolutely nothing. Look, I'm as good a technician as anybody around the world. I can read charts as good as anybody. But I'm not going to be dumb enough to go draw lines on BMNR saying this is what's going to happen. Because it depends on ETH. If ETH doesn't go anywhere, BMNR is not going anywhere. So somebody join. Let's see. I don't see you on the, maybe your camera is turned off and your volume is turned down. So if I see your face, I'll put you on stage. We can discuss it. So yeah, good morning. And that's where we are. And my account's getting killed. And I'm in low risk, again, still 75% cash, but even with what I have, because they're option positions, they're just melting away. And my put credit spreads are hitting, max loss already, almost, a couple of them. And now what do you do? But at least I know from a certain point, I'm not going to lose more. But then if you're holding shares of BMNR, SBET, or some of these other DATs or MSTR, you're getting smashed. You can sell all the calls you want. You can sell a call on MSTR at $300 or whatever it is, and taking $7. Well, the stock is down $7 in a single day. How's that going to protect you? So cover calls don't protect you on the way down, and cover calls actually limit your upside on the way up. But we talked about these million times, so let's not get into it. But I'll share the positions. Look, this under the surface bear market that's going on is very, very obvious to me. All I have to do is look at my watch list every day. Today, everything is red, with the exception of couple. And it's tough. It's a tough market. You're going to bleed. I mean, there's slow bleed. And my concern in all of this is, what if the indexes start selling off now? What do you think is going to happen to all the stocks that are already down 30, 40, 50% from their highs? I don't think they're going to outperform and then, go up while the indexes are finally returning lower. Because as we know, indexes are being held up by 7 to 10 stocks in the S&P 500. What if NVIDIA starts selling off? Okay. What if some of these Mag 7 start selling off? Meta is doing it already. So you guys got to be really, really careful here. And if you're holding a stock that's down 40, 50%, the reason is maybe it's a wonderful stock company you're holding. Maybe it's overpriced. Like if you're holding Oklo, if you're holding quantum computing names, if you're holding some MBIS or some of these, AI power center, AI data center power generators, you're going to get hurt. You are getting hurt. You're down 40, 50% from the highs. Now, you can do the roller coaster thing. You can say, okay, for long term, I'm going to hold it. Okay, cool. I have nothing to do with that. But, if you're a trader, you need to pay attention to what's going on, because you can't absorb 40, 50, $60 moves in a stock. So, well, he showed up and he left. So, but anyway, the link is here if you guys want to join. Andrew, was that you that joined? Okay, join again. All right, good morning. Good morning, everyone. Jenner Green, good morning. Traveler, Doug. Maybe we should have stayed at Ahmed's. Look, shoulda, woulda, coulda is not going to get you anywhere. Shoulda, woulda, coulda is not going to get you anywhere. All it's going to do is make you more upset. So Andrew says, I agree, but then we couldn't talk to him. So anyway, the link is here, folks. If you guys want to join, please join. I don't know what's going on. I'm seeing this little vertical screen. I think some people are watching on their cell phones, maybe on the vertical live. I don't know what's going on. All right. So, as today's title indicates, market's not healthy. Without a question, market's not healthy. I'm looking at my cell phone, so I'm looking at Bitcoin and ETH and Solana. So those are the three I follow. The rest I really don't pay any attention to. Bitcoin 101,625, down 1.5%. Okay. Look at MSTR, down 8 points. It's just like MNAV is getting crushed on all of these folks. The one I'm in, MNAV just broke 0.8. And a lot of people go, BMNR is never going to break 1. Good luck. When it does, I'll be doing another live and we'll talk about it. So the problem with all this is that if you're buying BMNR now today at 1.2 MNAV, which is a lot lower than what it was before, ETH can go up and MNAV gets crushed some more. BMNR may not even go up. So you guys need to understand all of this before you get involved with these debts. There is the new poster child, another poster child, this ASST. I have a massive option position on with leaps going to 2027. I'm eating it in the position. Okay, I bought it as almost like a lotto ticket, but do your due diligence. What's ASST? What do they have? They're merging with another company. Obviously they're a DAT. They just floated a preferred, which was oversubscribed. But then now they have a 12% commitment on that preferred. Well, they're not a regular company that has free cash flow. So where's that going to come from, right? Study all of this. Understand what you're buying. Buyer beware. Don't just go because, okay, there is a gentleman named Mike Alfred, I think, who supposedly he's an influencer on X, and he bought a million shares of ASST at $1.10 or something like that, and since then ASST is all over X, my X feed. Okay, who's Mike Alfred? Okay, maybe he had some success in the past. I don't know the gentleman. I'm sure he's fine. And because he bought it, everybody's jumping on ASST now. Well, go do your due diligence. Is ASST worth $1.10? Is ASST worth $1.30? Now, if you're long-term bullish on Bitcoin, if you think Bitcoin is going to 200, 300,000, yes, ASST is a bargain at $1.25. Because just automatically with their Bitcoin holdings, and their MNAV is going to go through the roof. Or their NAV, not as a value, which is just Bitcoin, is going to go through the roof. Yeah, of course. If you're long-term bullish, yeah. But if you're trading, you're not trying to grab pennies here and there, following these influencers, as good as they may be, they're holding thresholds are different, their reasons are probably different, but if you're trying to grab pennies, you're going to get hurt. The other thing is, all these poster childs, Open Door, another poster child, Beyond, look where Beyond is, $1.15. 50 cents to $10 to $1.15. How many bag holders are in Beyond? So all I'm saying is, I don't know any better, but what I do know is, if you get involved in these, expect nothing but pain if you get caught with one. And if you do get caught with one, take your loss and get out, as opposed to saying, it'll be okay. One day it'll go back up. So yeah, that's where we are. What are we doing? Let's see. I'm seeing myself twice, just not used to this shit. Anyway, so the link is here. If anybody wants to show up, please show up. We can talk about anything you guys want to talk about. Okay, there's an ex-member. There you go. Oh, yeah? I mean, we talked about that, Mojo. We talked about that, right? Oh, now I see the comment on top as well. I don't know what's going on. Yeah, we talked about that. I mean, we've been, I mean, you were my member. I've been talking about this MNAV situation for months. And knowing all this, I'm losing money. But at least I'm at the point that I can't lose more. So now I'm in a holding pattern. Do I believe ETH and Bitcoin are okay long term? Yes. Do I buy any of these million Bitcoin Michael Saylor stories or Tom Lee stories of ETH going to 20,000? No. No. For me, the price is what it is today. If Tom Lee is, Tom Lee's the GOAT. Nothing wrong with Tom Lee, following Tom Lee. But if you're buying BMNR just because Tom Lee is involved, if you're buying ASST just because some influencer said so, if you're buying something else or Beyond, or because Open Door or whatever, so because some YOLOer, is saying so on X, I wouldn't do it. I wouldn't follow any of that, buyer beware. Figure out who you are. Figure out where you belong. Figure out if your account can handle that drawdown. Figure out if you bought Beyond at 3, rode it to 10 overnight, and now down to $1. Figure out if you can handle that. Figure out you should be holding any of this stuff. So my point in all this, buyer beware, be warned, study your stuff. Nobody knows what the market's going to do. If anybody says I know, they're full of shit. So nobody knows what the market's going to do. Nobody knows what a stock is going to do from day to day, let alone hour to hour. So have your risk parameters set, and sometimes take a loss. So admit you're wrong. Like I'm admitting I'm wrong. I have 5 positions. All three out of 4 are wrong, and 1 is hanging in there. So I am okay. So listen up, bro. Okay, you are gone. So comments like this are not going to be allowed. So I will boot you guys if you put some ridiculous comments like that. But he's gone. He's in YouTube heaven now. So my point in all of this is, it's tough. Markets are not healthy. Crypto's on the verge. I mean, we keep testing this 100,000 on BTC and about 3,400, right? What's the next leg down? Potentially, is there one? Maybe. Again, if you're long term, look, I do believe the story. The story is U.S. government's debasing the currency, your currency losing value, you have to be in hard asset. I'm all in for that. I'm 100% in. I think that's what they've been doing. I think that's why all the asset classes are where they are: gold, stock market, real estate, all that stuff. I get that. I know how to protect myself. But then there is long-term investing and there is short-term trading. So if you're doing both, great. But if you're trading, you have to understand you're dealing with short-term stuff. If you're long-term investing, great. I have a long-term investment account. I have 4 stocks in there now. I added UPS today, and that's a different story. But if I'm trading, I cannot allow myself to sell a put and be in the money by $100 or $50 or $80. I just can't. That's how you blow trading accounts. And yeah, that's where we are. I mean, YouTube heaven is right? Because we don't deal with bullshit like that. So if you're gonna be belligerent, put some bullshit comment, I'm the only moderator, so you're gonna go to YouTube jail for life, or X jail or whatever the heck it is. So anyway, we should go to position, see how horrible we're doing today. Again, I'm wearing the black hat. Okay, let's do some housekeeping now that more people are in the room. Let's see. Okay, so Monday, Wednesday, trading with Sergio. Fridays, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Today, I have a members only live at 4:30 Pacific, 7:30 Eastern. I love doing those. It's more intimate, more one-on-one kind of a situation. So if you choose to be a member, click join, send me an email, sergio@sergioavedian.com. I will send you the Telegram chat group link. I post all my live trades. None of this is trading, financial, or investment advice, but I post all my live trades as soon as I do them on the Telegram chat group. Also, I post my positions at the end of the day for them, and on the YouTube channel community page, full transparency, wins, losses, all of it. I post my positions because that's the other thing that I see on X. I go, oh, look, I made $1 million on this. Oh, look at this position. Oh, look at that. It's nothing else, nothing there. I'm posting my full positions. It's for everyone to see. Again, gains, losses, all of it. So I post those Monday, Wednesday, Friday on the community page of the YouTube channel. And you can see that. But then again, there's about a 1-day delay. I may get into something. I may get out of something the next day. So yeah, I mean, that's where we are. I mean, you did kind of write it to the low, but look, man, all I'm trying to do is just trying to protect you guys because I have made all these mistakes and I still do, right? But it's much less. The pain is less, right? And when you buy something, you have to. I said this a million times, and I say it in private circles all the time. First of all, they ask me, like, why do stocks go up? Why do stocks go down? I go, it's pretty simple. It's supply and demand. It's like tomatoes and potatoes, okay? Supply and demand rules. And if there's more sellers, price has to get adjusted lower. If there's more buyers, price has to get adjusted higher. 1. 2, when you're buying something at that second at a certain price, okay, we're going to talk about that SJ in a minute. Actually, we should make that the topic of conversation tonight. Okay, so when you're buying a stock like an MSTU, let's say, which is a 2x ETF of MSTR, first of all, you understand slippage with these 2x ETFs. Everybody's crazy about 2, 3x ETFs. Now 5x ETFs are supposed to show up. It's not crazy to me. But long story short, there is massive amount of slippage because they don't own the underlying. They own swaps and they own options. And then every time they roll, you're going to lose money, number 1. Number 2, forget the 2x ETF, any stock. When you're buying that thing at that second from someone who has diametrically the opposite opinion of you, you have to think like that. They think it's going lower. That's why they're selling. You think it's going to go higher from the time you buy it. That's why you're buying. That's what makes a market. So once you understand that what you bought may go lower, then you'll understand how to risk manage properly. Then you'll understand saying that, oh, well, market will come and save my ass one day. It may not. Last 3 years, that's what the case has been. But then people are used to that. Well, market will come back and save my ass. But again, on a long-term basis, long-term, market has always done well. I'm talking indexes. But if you look at a chart like UPS or a Lululemon, or many of them are out there, right? Like UPS is selling what it was selling actually 20 years ago, about 17 years ago. It's the same exact price. It's right about, $90. If you look at UPS, you know, 18 years ago, it's the same price. But it went from 90 to 300, and then it's down to 90 again. So figure out inflation. How much has the index gone up since then, right? My point in all of this is, when you're buying something and you're convinced it's going higher, you have to understand somebody's selling it to you, okay? And all these nosebleed stocks now that people are just going crazy about, AI power generators and this and that. Okay, great. You bought Oklo at $10, you rode it to 200, and now it's down 100. You're still up 10x. Okay, fantastic. But what about the guy that bought it at 200 that thought it's going to 300? And there were a lot of people on X talking about that, or IREN, or NBIS, or all these, unknown names that became household names, or all these quantum names, right? If you bought Rigetti, I don't know, $5, went to 60, great, 12x. In what world? In 6 months, right? Well, now it's down to 30. You're still up 6x now. Wonderful. But what about the guy that paid 58 for it? Where is he at? So for, it's a zero-sum game, okay? For every, winner, there's going to be a loser in this world. And now, if you bought Rigetti at 60 or 58, and if you bought Oklo at 200 almost, and you're down 100 points, now what are you doing? What's going to happen? Is there a guarantee stock's going to go back to 200? Even on a long-term basis, although indexes may be making new high going forward, Oklo is not going to get there. Not for a long time, because at 200, it was selling in some sort of la-la land that then there are fools out there that just go crazy, So, yeah. Anyway, but yeah, this is a topic of conversation that we need to have on our members group today. Okay. I think people sell options because they're looking for consistent income. Okay, well, if you can answer my question, the example I gave on Meta, I gave on Duolingo, I gave on DoorDash, I gave on Celsius, I gave on many casualties, Netflix, I gave on all these, right? Then we can talk about it seriously, about consistent income. How's your income consistent when you sell an option and it goes from $4 to $40 overnight? How's that consistent income? I need you to explain that to me. Now, you can create consistent income. Instead of doing that on your own, why don't you go get into a structured product? There's a lot of cover call structured products, and it's proven over and over. On a down market, they underperform. On an up market, they underperform as well. Go check it out. You don't have to take my word for it. Structured products that go sell calls, right, all the time. Go for it. So to me, the whole idea in all of this is there is no guarantees in this world. There is no market's going to do what it's going to do. It's going to try to make everybody wrong. Okay. And to me, what happens last 3 years is not normal. That's not how the markets behave. Last 3 years, everybody is so used to, I buy today, higher tomorrow. It's going to go up 10x, like Palantirs and Hoods. Although I love these companies, don't get me wrong, but I think they're priced incorrectly. And then I have two choices. I can chase, and I know chasing doesn't end well, so I'm not going to chase. I'll sit on my hands. I'll just sit on my hands. That's what I'm going to do. That's what I'm going to do. But I was a $10 Oklo buyer. Okay, well, where'd you exit? Or are you still in it? Congratulations. You have a 10x. You had 20x, now you have 10x. That's long-term starting investment right now. Yeah, no, that you can. Well, look, that you're keeping pace with inflation at least. So that's a good question, good segue. So this is what I believe. I believe there is massive need for financial literacy in this country. Okay, the rich have figured this out. The top 10% owning 87% of the assets in this country is proof of that. They have figured all this out. I'm one of those. How did I figure that out? I go, okay, the government is going to debase the currency. It's going to devalue the US dollar. Fiat currency is shit. I need to be in long-term assets. You can be in the S&P 500. You could dollar cost average into an S&P 500 as passive investment, and you would have done extremely well. Now, government says inflation is 2%, 3%. It's not. It's a lie. It's a lot higher than that. US dollar loses 6%, 7% of its value every year in buying power. So, but at least S&P 500 or triple Qs will give you 10, 11%, including reinvesting the dividends. So you're keeping pace, and then you're going ahead. I mean, you're at least keeping pace with what's happening in the country. So I would not. I agree with the first part of the comment. The second part, I'm setting aside money to invest in tempting to start now at the top or save. If you bought, Justin, every single top, 1987, and then crash, 2000.com at the top, bought every top, okay, every single top, and then 2008 GFC top, you bought the top tick, okay, 2020 19 pandemic, you bought the top, April, or the tariff liberation bullshit, you bought the top, you still be so far ahead, even if you bought every top, if you dollar cost averaged, and if you patiently held. And again, that's power of compounding. So a good segue would be, I want to fix financial literacy in this country. Believe it or not, I have another channel with much larger audience, and I think the people that I cater to on that channel are definitely in need of financial literacy. But I think every person in this country is in need of financial literacy, starting in elementary school all the way to college. So I created a website which puts out free newsletters, free. I'm not selling you anything. I don't have a Discord channel. I'm none of that stuff. I'm just asking you for your email. So every Monday at 12 Pacific, you'll get a free newsletter in there. And it talks about these basics, power of compounding, rule of 72, dollar cost averaging. What's an ETF? I mean, people don't know. People don't know in this country. All they do is they go buy an iPhone every 3 years on 3-year installment payments, and they think their life is good. No, you have to invest, especially if you're young. Time is on your side. You must invest. Forget about picking stocks. Let the pros handle that. Go and the dollar cost average into an ETF, and long term you're going to do it amazingly well. That's how you're going to create wealth. It's not going to be by putting your money in a CD or some ridiculous, or worse yet, putting the money in the bank. God forbid, right? By the way, I'm not against debt. I'm for debt, but managed properly. But then, unfortunately, we know we cannot manage debt, because I'm looking at, on the Fred website, I'm looking at auto loan delinquencies, prime and subprime, credit card delinquencies. They're reaching 2008 levels, just about. This is with a healthy economy, supposedly. According to the government, the economy is great. No, it's not. But again, all this you have to figure out, and the market is telling you where the economy is at. But is it truly? No, because under the surface, there is a lot of carnage. Above the surface, the index is doing perfectly good, because they depend on about 7 to 10 stocks. If you're lucky enough to be in those 7 to 10 stocks, you're doing great. Yeah, that is the thought process, but that's a misleading thought process, and a lot of people get smashed because of that. Because you could have created beautiful income, like 3%, 4%, maybe a month, maybe 2%, 4 or 5 is unreasonable, by selling options. Is that all you need is one of those? It'll wipe out the whole year's worth of gains. So If you're going in for income, go get into a structured product. There are many, many, many structured products out there, right? There are cover call products out there. So, and he said, "Oh, great, fantastic, congratulations, congrats." And hopefully you didn't sell calls and kept rolling up, because a lot of people do that too. Hopefully you were just open position, no cover calls, none of that stuff. Rode the horse as much as you could, and look where you are. Great, amazing, congrats. Because that's the other thing, with the people with the cover calls. They're like, "Oh, I sold it." Okay, you bought Oklo at 10, sold a 15 cover call. Okay, it goes to 20. You roll to 25. What are you doing? You're just kicking the can down the road. If you really are committed and believe in it, just let the thing go. Let a good horse go, man. You know? Okay, I'm four now, Doug. Four stocks. Google. I bought at April low. I got lucky. Lululemon, UPS, and Kava. Those four. And they're pretty diversified. Kava, I'm eating on. Google, I'm almost at a double. Lulu, a little even, maybe evenish. UPS, I just got it. So those four. I was in Unity Software. I flipped that with a double. I don't like flipping, in the long-term investment account because of tax ramifications. But then if you give me a double, I'm going to take it. And so those four. That's it. Kava, I'm down about probably 20%. I have cash secure puts that are going out, so I'll have a full position on if I get a sign at 50 next Friday. So then I'll have a full position on Kava. I have a full position on Google. UPS I just bought. I will sell some puts on that. And Lulu. That's it. Andrew says, "No, I don't sell." Okay. Oh, you only do directionals? Yeah, that's another headache that I need to explain to you at some point. You can't be too successful putting too many directional bets on options over long periods of time. Anyway. All right. So what else have we done? Anybody want to come on? Let's do it. Let's put the link on. I want one of these BMNR chopstick drawers to come on and explain to me what their purpose is in life. Yeah, there's the link. So if you guys want to come on, come on. See, I put the link, it puts it twice. Oh, it puts it on the vertical and it puts it on the... I get it. I get what's going on. Okay, cool. Actually, I like this format. You can watch me on your cell phone live. If you're watching shorts, I think what's happening is that if you're watching shorts, you know how people flip on YouTube Shorts? And then live is showing up. The live is showing up as a short, and then you can click on and watch it, I guess. I get it. I get what YouTube is doing. Oh, bigger audience, maybe. I don't know. All right, let's go see the blood. Should I change to my red hat? Because I'm about to look at my account. Like, disaster. Freaking disaster. See, nobody will tell you that on YouTube because I don't give a shit. I have nothing to prove. I've been doing this for 30 plus years. I've seen it all. I have nothing to prove to anyone. I don't have, I'm not in a pissing race with anyone. I'm competing with myself, and more importantly, I'm competing with the market. That's enough competition for me. I'm not going like, oh, look at this guy, look at that guy. I'm like, who cares? I'm fine, thank you. I appreciate it. All right, so you guys can see this, hopefully. Yes. Okay, cool. What do we have? What's going on? S&P 500, see, chugging along, and then I'll put up some charts, and you guys will see what a disaster of a situation. These are my positions. I trimmed some. Yeah, good thing I trimmed that yesterday. Anyway, so let's get with it. Let's get on. Okay, ASST. I'm in it with the January 2027 leaps. I have 325 of those, 2.5s. I have 250 of the, I added some today, 250 of the 5s. I was short equal amount of the 10s. As you guys can see, my cost on the 10s is 38 cents. I bought a lot of them back at 15, 20 cents. So My cost basis on the long side is going lower because I was in a call debit spread, so I'm covering the short leg of the call debit spread, letting the lotto ticket go. Next position, Beyond Meat. I had bought 300 of the $1 puts when the stock was rallying. Well, data decay was killing me. So what do? Instead of waiting, sitting on my ass, watch my options melt away, I started selling week after week. These were November 21, week after week. I turned them into put credit spreads by selling 1.5 and 1 puts. That's how you turn a negative trade into a positive trade. So I'm debating. My short puts are 1.5s and 1s expiring on Friday. My long puts are expiring week after their regular expiration. And I sold the 1 puts. They're most likely going to expire worthless, although you don't know. Stock is 114. I sold the 1.5s at 40 cents. They're down to 36 cents. They were down to 26 cents this morning. And then my long puts, so I'm long 100, short 50 of the weekly 1.5s and short 50 of the 1s. So call debit, long directional puts turned into put credit spreads, so saving my butt there. I just started buying the stock called Blaze AI. There's earnings coming up in a couple days. They did just a private placement at $3.20. Stock is $262. I bought 2,500 shares at $264. I was long FIGG, as if whatever is highlighted is current. So I will post these on the community page. I was long 16,000 shares of FTHM, Fathom Holdings, the largest real estate mortgage broker and a title company in the Carolinas. I trimmed after the close. Earnings came out. Stock ran after the close yesterday. Luckily, I trimmed 6,000 of the 16 down to 10,000 shares. Stock is $127. I have 2 sell orders at 130, 135. I want to trim some more. It didn't work out. I had some lot of puts that I almost broke even, or maybe lost a couple of pennies on Open Door that are expiring on Friday. No need to let them expire. Don't let things expire on you, folks. Even if you take the 10 cents or a nickel, whatever it is, that money counts. It's real money. Here's the killer. Here's the one with with defined risk downside trade down shit ton of money, and I'm like, I wonder if it was not defined. Oh, it would have been a lot worse. So anyway, what do we have here? I have 80 short put credit spreads going out to January 2026. Short 15 calls, long 12.5. Sorry, short 15 puts, long 12.5 puts. I put them on about $1.60 credit. So stock is 1140, folks. Okay, so it's below my long put side, meaning max loss is going to be there if the stock is exactly at this price come January. So I'm at max loss already. So now I did it at $1.60 credit. So the difference between 15 and 12.5 is 2.5. $1.60 was already taken in. So I could lose max another 90 cents, which I will, because my intent is to get assigned 8,000 shares of SBET, which I think is the best DAT if you like Ethereum, period. No ifs, no buts, in my opinion. But then again, we can debate that as well, as opposed to BMNR or some other ones. So yeah, I'm gonna get assigned 8,000 shares come January, third Friday of January, if the stock is under 15. And if it does rally, all the premium is mine. But then with that money, I keep buying now January 15 calls. I'm up to 135 of those. But then since they have weeklies, I've been selling weekly calls against the long position, like a calendar spread, at 3 cents, 4 cents. So I keep lowering my cost, but I'm still eating it. I'm still overall eating in the position because look, man, if whatever you do, if your stock you buy goes lower, you're gonna eat it. Deal with it. That's it. When I did this trade on SBET was 16 and a half, or 15 and a half, sorry. That's when I put on the 15, 12 and a half put credit spread. I'm not dumb enough to do it here, right? Because if I were to do it now, if January comes, I don't want the stock, I can roll, do a whole bunch of things. I have choices. But what I'm trying to say is Stock is down $4 from where it is. Okay, I can get out of those put credit spreads I put on at $1.60. Literally, I can get out at like maybe $1.85, $1.90. So I'm losing 30 cents. If I had bought, again, perfect example, if I had bought 8,000 shares of SBET at 15.5 when I put the put credit spread on, I'm down 4 point plus. That's $32,000 loss, as opposed to just losing $2,500 on the put credit spread, because that's where I'm at. So even with defined risk downside, again, SBET, I like the company a lot. They're fully staked. I like the management quite a bit. But then it's not a regular company. It's they have no earnings. It goes with ETH. If ETH goes up, SBET goes up. If ETH goes down, to 2,500, SBET is going to be $6, $8. Now, if you own the shares, good luck. I'm telling you guys, I have defined risk downside trades, and I'm losing my ass. Welcome to Painland. And last but not least, 2x ETF on Solana. Again, put credit spreads, 12s and 10s expiring next Friday. I put those on at 97 cents or 98 cents. And on this one, my intent is definitely to get assigned. On SBET, I'm not sure. If the stock is under 12, I will take 4,500 shares of SOLT at 12 minus the 97 cents. So it'll give me a cost basis of about 1093, or no, 1103. Stock is 1080. I can deal with it because the calls are so juicy on these that I can sell weekly calls and get myself out of there. Or on a rally, I'll get out. But my intent is 100% getting assigned SOLT at 11. So, and if not, then again, put credit spread will, like yesterday, stock was 13.5 high. My put credit spreads were 50% gain. Today, stock is 1080. My put credit spread, actually, again, let's look at that again. So if I have bought the stock at 12.5 yesterday, I'd be down $1.70. Okay, I have a put credit spread on. Where is that at? If I were to get out, push comes to shove. If I were to get out of that, okay, they're $1.52, so I'll probably get them out at 175 and sell the 10s at about 70. So I'm losing maybe 15 cents, 18 cents, although the stock is down 2.5. So these are called defined downside risk trades, and you can still lose, folks, because I took in $1. The difference between 12 and 10 is 2. I took in $1, 97 cents. Max loss is 2. I can still lose $1. But I want, like, if SOLT or SBET goes to 5, because Ethereum is at 2,000 and BMNR at that time will be probably under 20, or SOLT goes to 5, I can't lose any more than that. Now, once I get assigned and it goes lower, then yes. But then I have choices. I'll figure that out when I get there. Beyond Meat, I'm going to have a choice on Friday. Most likely, I'm just going to clean it up. I am just cleaning the account up. I want to be 80% cash, hopefully by Friday, and then keep my bullets dry, and then we'll see. Live for another day. But let me go to the front. Let's see if you guys have any questions. No questions. Nobody wants to come on. Wonderful. Okay, so what are we going to do? Let's go through some charts. Let's look at some pain. Let's look at some pain. All right. Okay, so it goes to show how misleading the indexes are for you. This is the S&P 500. Index is great, right? Wonderful. All-time highs, literally 1% from ATH. I'm like, okay. Well, what if you were in Meta? Yeah. Oh, 613 now. There you go. Now what? 800 high, 613 low. Is it a good price here? I don't know. Looks like a downtrend to me. Technically speaking, of course. At some point, it'll probably be a good trade at some point, but no. Okay. These are big names, and then I'll go to some of the small name pains. This is Oracle, folks. By the way, the gap up day on that day was 345. We're down to 225. Okay, so this is Oracle, folks. The other one is Meta. These are trillion-dollar companies, right? Okay. If they are doing this to these names, what do you think they're going to do to your small name? Right? You're going to get smashed. So the point is, sit on your hands. Don't be involved. So that's Oracle. On the 200 EMA, technically, into support now. Gave up everything and some more. of that circle jerk. But more importantly, there is something called a CDS. And when I was doing mortgages, and you guys remember it in 2008, credit default swaps, right? Okay. Do you know if you guys have a Bloomberg terminal, you should go check the CDS on Oracle. Go look at that chart. It's a complete opposite of what's happening here. It's going through the roof. That means people cannot just wait to buy insurance on Oracle. CDS credit default swap is an insurance you buy in case the company fails. We're talking Oracle, folks. I'm not trying to scare anyone. I'm just talking to reality here. Go look at on Bloomberg terminal what the CDS on Oracle is doing. Supposedly, they're going to run out of cash in November of 2026. Look, I don't know any of this stuff, but I just look at the price. The price is telling me the story. So let's go look at some of these. Here's the next poster child of craziness. Oh, by the way, let's just look at beyond. Okay. So here's the poster child. There you go. I mean, if you got caught in this, God bless you. God help you, more like it, not God bless you. Here's BMNR. People just look at, so about month and a half ago, people were drawing like wedges like this, because that's why I don't draw lines on my charts. I like naked charts. So they draw this wedge. Oh, the wedge broke out. Oh, great. Yeah, it went here, and then it broke under and over. Now you draw another line here. These chopstick gurus, they just keep drawing new lines all over the place. I'm going like, no, let's do it. Let's do a draw line here. This is ETH. This is Ethereum iShares ETF. Okay, so let's take a look at this because a lot of people think BMNR is just going to do it by itself, or SBET is going to do it by itself. No. So if Ethereum is going lower, BMNR is going lower, SBET is going lower, all of them. So let's do a price comparison, right? Let's see if BMNR is outperforming, because people go like, oh yeah, MNAV is like this and MNAV is that. Okay, let's just do it. So the top on ETHA, which is the ETF, iShares ETF of Ethereum. Let's look at the top and look at the percentages. Okay, let's do it. So on 10/7, October 7, the top was 36 on ETHA. Okay, all right. Today, we're at 26. So how much is that? That's 10 points. What's 10 points on 36? About 30%, right? Okay, so 10/7 to today. Not even a month yet. Well, yeah, about a month. Okay, let's look at BMNR in the same time zone. And let's look at SBAT. People, this is what I call it. ETH is the dog, BMNR, SBAT, all these DATs are the tail. If ETH is not going up, BMNR is not going anywhere by itself. In fact, it's going to go lower even if ETH doesn't go, because MNAV is getting crushed. But then again, all right, so let's look at it. So same day, okay? 10/7. Here's 10/7. Exactly. This is 10/7. BMNR, $67 a share. Okay? All right. Today, BMNR, let's be generous. Let's be generous, $40. So, ETH is down 30% from, 36 to 26, the ETF. Same thing on Ethereum, by the way, 4,500 to 3,400, down 30, 25, 28%. BMNR from 67 to 40, that's $27. So it's actually down more than Ethereum. 27 on 67 is close to 40%. So again and again and again, folks. Now, a lot of people are going to say, oh, it's into support, it's into this, it's into that. See, they're going to draw this line now. They're going to go, oh, there's support in here at I don't know, what is this price? It looks like pain, actually. It looks like 30. There's support there, then draw another line here, they draw another line there. I go like, you guys are fools, man. And then SBETs actually has done worse, because MNAV keeps getting crushed. And SBET is my horse in this game, right? Okay, let's look at SBET from October to now. 1150 now. October 7th, when ETH was at the high, October 7th. Let's just not lie to ourselves. October 7th. Oh, look at this. This is worse actually because MNAV keeps getting crushed on this. This was October 7th, right there. 20 bucks. Today we're 11 and a half. 8.5 points. That's over 40%. That's because MNAV at 20 bucks was at 1.1. Now we're down to 0.79 to 0.82. And that is what's happening, folks. Wall Street is shorting the crap out of these and buying the underlying, which is ETH. And that's what they did with MSTR. So wake the F up, folks. Here is your strategy. Down another $8 today. Okay, let's look at now on the IBIT is the Bitcoin ETF. iShares Bitcoin ETF. Okay, let's look at it. Let's go back a year. Let's go back a year. Let's go to, let's see what date this is. 12/16/2024. IBIT was 61.50 or 61, let's say. Okay. Today, IBIT, which is Bitcoin's ETF, this moves point for point, is 57. So down less than $5, maybe down 3%, 4%. Okay. So we're going from this day right here, which was 12/16. Okay, so let's go to 12/16 on MSTR. You know, so all these furus that are out there. Oh, this 12/16. Let's take a look. 12/16 right here. MSTR high 438. Okay. Bitcoin is down 3% since 12/16 last year. Get it? Okay. So 438, we are where are we today? 220, let's say. 440 to 220. What is that? Even you guys can figure out that's 50%. So if you bought MSTR thinking that MNAV, multiple to the NSF value, is going to keep going higher, and you're a 50% backholder, while if you had just bought Bitcoin, you would be down only 3% or 4%. In fact, Jim Chanos had a wonderful trade. He just closed it, announced it on X a couple days ago. He was short MSTR and long Bitcoin. He ended up making close to 40% on that trade in less than a year. And there's your trade right there. And this is what Wall Street is doing to all of them. And they're going to do it to BMNR. Their MSTR's MNAV probably will go to par or one or less. SBET's already at 0.8. That's why I'm doing that one, thinking I can't get hurt, but it's getting hurt because the MNAV keeps going lower. So don't think that MNAV on these cannot go lower. Now, on long term, if Ethereum goes to 8,000, all of these are going to double, triple from where we are. But then that's a big if. If Bitcoin goes to 200,000, is MSTR going to be a lot higher than what it is today? Of course. But then it's not, is it? What if Bitcoin goes sideways for another year? MSTR actually is going to be lower because MNAV is going to get crushed. They have convertible debt they have to deal with, all that good stuff. So understand why you're buying, folks. Don't just go listen to some furu on X who has drawn 8,000 lines on their chart saying, oh, look at this indicator, look at that indicator. None of that is going to work. Okay? Go look at Bitcoin chart if you're interested. Then figure out what MSTR is going to do if you can get that at 1 MNAV. If you can get 1 in MNAV, you know, okay, fine. I'm getting it at 0.8 MNAV and I'm losing my ass with a defined risk downside trade. What is your exposure? If ETH goes to 2,500, where's BMNR? Anybody? Probably like 21, 22, another 50% from here. But anyway, so look, I don't wish it. I'm long. I'm losing my ass. But you know, at least I know I cannot lose more than what I lost already. So that's the good thing about it. So let's look at some more nosebleeds. Oh, the new poster child is SanDisk. Have you guys seen this thing? Oh my God, it's up another 8 today. SanDisk. This is the disk maker, hard disk maker. So I'm going to say something crazy like I would like to short this thing, but then right about here. So let's do a paper trade. I'm short at 285. Let's come back in a month. Let's see where it's at. I'm short saying just get 285 paper trade. Here's your Oklo. Okay, great. Look, I mean, let's just go too far right here. You know, stonks only go up. No. May 6th, literally 6 months ago, was $26, $25. Went to almost 200. Okay. Now we're down to 100. Okay. You still have 4x if you didn't take 6x. I mean, great, right? But then if you expect this to keep doing what it did, you're a fool. Because this company, for example, at 25 billion market cap, after it has gone down 100 points almost, still has just a drawing of a nuclear center, mini nuclear reactor. They have not one in working condition yet. But then people go, yeah, oh, AI is going to need a lot of power. I'm like, oh, okay, cool. Go talk to Oracle owner about that, down 100 points. So let's look at some of the quantum names. If you guys have any ideas, like this is how crazy these things are. So, oh, ASST, the one I have 500 leaps on. Buck 28. Is it worth buck 28? I think it's worth about $3 at the moment with Bitcoin price where it's at. This is actually selling at over 1 MNAV. And then people go like, they draw charts on this and they go, oh, it's going to 12. I go, huh? I mean, from your mouth to God's ears, if it goes to 12, that's like a $600,000 trade for me. Could it happen by next January 27? I hope so. But if it doesn't, I'm not going to cry about it. Again, define risk downside, folks. So what else? Let's look at some of the quantum names and then I'll answer some questions and then go have a cup of coffee. There's your Rigetti. Under 30 now, great. I mean, if you bought this thing, you don't go back too far. If you bought this thing, it was a good trade. I'm not going to deny it. If you bought this thing, okay, before the breakout, let's say for all the chopsticks folks, right here, the breakout is today, right here, this big all volume day, up day. If you bought this thing 9/12, less than 3 months ago, it went from 16 to 60, almost 58 in a matter of few weeks. And now we're down to 30. Okay, so I was short this thing, by the way. Covered too early, obviously. But my point is, okay, this thing is going to go do a round trip or probably go down to 20. Again, even at 30, it ain't worth the paper it's printed on. Because fundamentals have to come into play. Technicals are technicals, but fundamentals have to come into play. When Rigetti is $30 billion or $25 billion market cap, and their sales, forget profits, their sales are $5 million a year. I mean, this thing was more expensive than Palantir, for God's sakes. And here's Palantir, still holding in there. I don't know. Here's SoFi. A lot of people like SoFi. Yeah, up to 32, 33. Again, had a little whoosh, scared some people off, and then actually new all-time high, looking great. I don't know. Here's Hood. I like this company quite a bit. We should pull back. Is it topping or is it consolidating? It looks like consolidation before it goes higher. Some of the Max 7 stuff, Apple, all-time high almost. Google I own. UPS I bought today. Yeah. I mean, UPS did actually, I think it's turning around. So I paid 95, 80, I think. I should have bought it a couple days ago when it pulled back after the breakout, after the news was after the earnings, actually. Plus, UPS has $1.64 dividend a quarter, folks. That's like $6.40. I mean, we're looking at like 6-7% dividend. I'll take it. I like it. And but then again, we go back. UPS. Okay, UPS hit literally $80. I have to go back like literally to oh my God, I was wrong. Actually, I was right. 2004, yeah. 21 years ago was $80. And I probably have to go further, but okay, so there's your UPS story. If you bought UPS in 2004, you're even. That's not my cup of tea. I bought it now. I bought it today. So, and I'll sell some puts on it. But yeah, man, not everything is what it seems to be. That people go like, "Oh, this is great." I'm like, Again, don't forget, for every buyer, there's a seller. And so I do like UPS though. I kind of pulled back, tried to close the gap. Technically, again, chopstick talk. Hit over 100, pulled back to 91. That's when I should have bought, but then the market was like on it. You know what? So, what else? Nosebleeds. Some nosebleeds. Who got smashed? I like a couple of names. Path, I like quite a bit. It's kind of consolidating. It's getting in my buy range. I bought BZAI today, Blaze AI. It broke out and look where it's at. What is it at? 263. I think I'm going to turn that into a covered strangle if I can get some premium out of it. Earnings are out in a couple days or tomorrow, I think. Not that it's going to matter. I don't know, man. What else? What else am I? Oh, Resolve. I want to buy Resolve actually. Oh, we're down to 324. Yeah, maybe. Yeah, you know, a lot of people got hammered on Oscar because they couldn't make a deal. Yeah, I'm not touching that. Neo. Yeah, better be careful on that Neo. You know, we take out about 625 on that. I think we're going down to 550 range. I like this company right here, EHang, which is Chinese EV toll maker. Looks like Archer, and yeah, I will buy Archer 2X ETF actually if it retests the low. Look, I have buy orders, but I'm not rushing on anything to do anything, honestly. You know, just keep the powder dry. Sitting on your hands sometimes. The best trades sometimes are the trades that you don't do. But if you look at the indexes, right, there's SPY. Green on the day, 1% from the high, not even. Looks beautiful. Under the surface, not so much. That's why the title of the live stream today. Market is not healthy. You got to be careful. You know, then there's NBIS. People keep pounding the table on that. Breaking down completely today. The pain hasn't started there yet. There's IREN. I mean, they all look like the same double tops, and they're about to fall off the cliff. But you know, they're still, even with these corrections, they're still so far away from their 200 EMA. You know, some of these will bounce. They're good trading stocks. I'm not going to deny it. Like IREN probably is a good buy on the 50 EMA. NBI, and they all have 2x ETF, by the way. NBIS is probably, now I got to wait for the 200 on that one. But, you know, I mean, look, it's down 30, 40%. But people on X, they're just resilient. They go like, oh, it's going to go back up. I'm like, okay. As a trader, I cannot do that. As an investor, all power to you. Well, CIFR is another one. Actually, that could be bought for a trade. Yeah, it's coming down to the 50 MA. Yeah, volume is kind of declining. MACD doesn't look that good. See, I can talk the chopstick talk as good as anyone. But then again, look where it came from, right? So $5 to 25. Well, momentum is a powerful thing, both ways, folks. The stock was $1.86 about 6 months ago. $1.86 to 25 is a fortune, right? Okay, so always think of where it came from. Is it going to go there? No, but there is a lot to fall if, see, this is my point in all this. Market's 1% all-time highs, and these stocks are selling off. Like this stock from 25.50 high down to 17, down 8 points, down 30% already. Okay, what if the market sells off? What is the stock going to do? Is it going to go make a new all-time high while the market's selling off, or the index? No. So yeah, I mean, those are the things I pay attention to. I don't need to be involved. Although I will pick my spots. I will probably trade this one if it got down to about, where's the 50 MA on this? I'm at 15, 16 range. Yeah, right about 16. I'll give it a crack. Try to make a few points. You know, trading is trading, man. I don't care if I like it or don't like it. This is trading. So, you know, but then, and then for all the people who had short puts on Duolingo, how do you deal with that? Stock 545 highs, 182, and it's going lower. How do you deal with that? Stock closed at 260 before the earnings. and it opened at 185 and you had sold puts. How do you deal with that? I want somebody to explain that to me. How do you deal when your put goes from 5 to 50 overnight? You know? Then they talk to me about selling puts, selling calls. I'm like, how do you deal with that? I don't know. I know two ways. You just take the shares and eat the unrealized loss becomes a realized loss, or you take the shares, still becomes an unrealized loss, new unrealized loss, then you start selling calls, try to cover your ass. I don't know. It's not my game. I can't play that game. What else is going on? Oh, Celsius was another one, right? Yeah. I don't know. I don't know how to deal with that. I mean, Meta was one, obviously. Well, now Meta still going lower. I mean, I don't know. Meta, actually, I'm going to get interested at some point. But then Meta during April had this sell-off too, 750 to 475. That's a pretty nasty sell-off. But the market sold off 20% then. This is markets 1% from all-time high, and then, we're down. Again, all this cash, circle jerk that's going around between Meta, OpenAI, Oracle, AMD, NVIDIA is all getting questioned now. Well, I've been questioning this for a while now with the musical chairs, right? The same 100 billion, 200 billion goes around. Every time it gets an announcement, that stock tanks. I mean, it shoots up and then it tanks right back. The calls looks like distribution to me. But so Meta, where would Meta be a good buy? According to Chopstick analysis, 600 is okay. Tested 600, bounced 30, 40 points. It's a $600 stock, folks. I don't know. Maybe down to here. Next support into the gap here, 550 range. I mean, that's my question. Like, market sells off now 10%. Where's Meta going to be? It's certainly not going to be higher than what it is today. So that's all I'm looking into. If market sells off, where are my stocks going to be? Are they going to go against the stream? No. So, yeah, I mean, everything's getting smashed, secondary stocks. So that's where my thought process is, folks. I can't see clearly. Oh, you're on your phone? Yeah, maybe. I don't know. I'm not sure if I like this horizontal thing. Or not horizontal, whatever. Well, thank you, Will. Forced to the stream. Wrong question. What's a good stock to start out for? There's no such thing. Go index it. Don't buy a stock. If you're asking that question, I'm not being mean. I'm just go buy an index. Buy an ETF. Don't mess with stocks. Although I would highly recommend you go subscribe to my newsletter on my website, www.sergioavadian.com. So I would love for you guys to help me with financial literacy in this country. So I'm going to look down and put the website address in. There's already 4 blog articles. The website is new. It's about a month old. Share it. Talk about it. It's going to teach you pretty much, finance is complicated. I can make it as complicated as possible. But then the website is done for the average folk who need financial literacy. So go subscribe to the free newsletter. Free. I don't ask you for anything. None. Other than your email. All right, let's see. Is it me the screen is rubbed? I don't know. Is there a resolution? I think it's you. I see myself pretty clear on both screens, the vertical and the horizontal one. I think it's you. Are you on your cell phone? Maybe. I don't know. Doug says, I closed my RGT at 30 puts today with decent money, but only 30 man. Yeah, it could be. You're lucky you had 30 puts. What if you had 40 puts? David, I don't know. Is that a problem for everyone? You guys can see me clearly? Maybe when I put the screen on, it's so small. Maybe that's why you're not seeing it clearly on your cell phone. But I'm going to post the positions there anyway, so I wouldn't worry about it. Short puts. Yeah. Same problem there. Okay, maybe you guys are on your cell phones and the screen that I put up is pretty small, and that's why you're not able to see it. But then for the members, I post my trades. You guys are members. I see with the tag. You guys are members. I post my trades, and I post at the end of the day the position. So you guys don't need to chase it. It's not something you guys are not used to now. Come on. Okay, well, thank you. Can you explain reverse stock split? Yeah, a lot of companies do it because they lose. The stock price has to be at a certain level for it to be NASDAQ. It's a NASDAQ requirement. The reverse split is not a good thing. Just let's start there. If a company is doing a reverse split, that means stock price is down to like $1.02 or whatever, and then they do a reverse split. So reverse split is exactly the meaning of a regular split. So Netflix, for example, is $1,000 stock. It's going to a regular 10-for-1 split. Now listen to that carefully. 10-for-1. Oh, Polestar. Okay, yeah, because I don't think Rivian is there. I'll look at that. Yeah, Polestar is a bankrupt company. And so anyway, but long story short, don't buy it. Please don't buy it. So regular split is if you have, like say, if you have 100 shares of Netflix, I'm explaining both sides of it now. A regular split would be you will get the next day 10-for-1. So for each share that you're holding, you will get 10 shares. Now, people think splits are catalyst for a stock to go higher. It's not. Nothing is changing with the company. That's a new game that they play now. When the Netflix they announced the split, it went up $40, and then it's back to exactly where it was. So you're going to get 10 shares for each share of Netflix you own. So if you had 100 shares of Netflix, the next day, 10 shares for each one, you're going to have 1,000 shares of Netflix in your account. But the price of Netflix is also going to get divided by 10. Get it? So if it's $1,000, you have 100 shares. That's $100,000. So it's not going to affect anything. The next day, you're going to have 1,000 shares at $100. So that's still the same $100,000. That's a regular split. Reverse split is something companies do to get NASDAQ requirement in most cases because the price of the stock has gone down so much. The reverse is if you're holding, let's say Polestar is going to do a 10-for-1 reverse split. If you're holding and stock is $1 and you have 100 shares, okay? So you have $100 net worth in that stock. The next day it does a 10-for-1 reverse split, okay? Now you're going to have 10 shares, but then the price is going to go to $10. So you still have the same $100. But the price is going to go up, but then you're going to have 10 shares instead of 100 shares. So that's as good as I can explain it. Reverse split and a regular split. Regular split is supposed to be positive. Reverse split is something that almost bankrupt companies announce. But let's look at Polestar. I'm pretty sure it's into the pennies. Is it penny stock? I am pretty sure. This is the screen you guys cannot see clearly. I'm pretty sure. What was the symbol? PSNYW. Way too many letters. I'll bet you it's in the pennies. PSNYW. Yep, 22 cents. That's exactly why. Now, I don't know what happened there. The crazy day, of course, pump and dump, right? It goes from 20 cents to 80 cents. Yeah, they're going to announce a reverse split. That's Polestar 1 year, 1 day. Let's look at Polestar 3 years. Yeah, there you go. There's your success story, Polestar. Let's go to 10 years. Yeah, look at that disaster. Oh, it wasn't that expensive anyway. It was like 2.5 down to 20 cents, only down 90%. By the way, folks, you guys know stock can go down 50% indefinitely, not hit zero, right? More math. But the stock did have those crazy days. It had one. It went up 4x, and then it's right back to where it was. Reverse split is not going to change anybody's life. The company is still a shitty company. It's a bankrupt company, but it's just like Beyond Meat, just like all these other ones. Not much is going to change, folks. So Just because it's going to split doesn't mean shit. Anyway, all right. What else? That's about it. I will buy a little bit more BZAI. I will definitely clean up my Beyond, decide if I want the shares. Oh, okay. I may just take my break even or 10-cent loss on that SOLT because we're down to 1064. Yeah, I gotta learn how to take losses, folks. Anyway, if you have no more questions, I'm gonna go have a cup of coffee. All right, so I'll see you guys on Friday. May all your shorts tank and may all your longs skyrocket. I wish you health. If you like these live streams, please share and sometimes show up. I mean, you guys are shy. You guys are not showing up. I would like one of those Twitter, and with all due respect to all of you, most of you are full of shit, but just come on, just let's talk about stuff. Let's just question the validity of. See, I'm posting everything. I'm posting losses. I'm down 20 some grand on the SBET. I'm not proud of it, but I'm wrong. So far, I'm wrong. But talk about your losses a little bit, folks. There's not too many talk about losses. They all put their gains, and they all put some screenshot that's like Adobe Photoshop almost. I go like, okay, just put it up. What do you have to hide? Don't put your account up, obviously, but put up a position that shows an account number and not the account number. You can cross the, but it looks kind of valid, real. Yeah, I would like those folks to come on and have a not a debate, but a discussion about what they're doing. And I want to be as successful as they are. I don't know how they're doing it because the way they're putting it up or representing it is not going to work. That I know. That I know. Okay, you're gonna go. I have no idea what that is, and you're spamming, so you're gonna go to YouTube heaven as well. Bye bye. I have no idea. So when you do vertical streaming, I think you get a lot of these spammers. But what else? That's about it. See you guys on Friday. Power Hour, 10 a.m. Pacific, 1 p.m. Eastern, and see all my members today at 4:30 p.m. Pacific, 7:30 Eastern. Much love. Oh, okay. You can talk about hymns if you want. Now or during members? Let's do that in the members. There you go. There you go. Amazing insatiation. I'm down 100K since October 10. Great. How's that talking about down? I don't know who you are, sir, but if you want to grab the link and come on, we can talk about it if you want, what your positions are and how much worse it could get or how much better it could get. But then it looks like you're at diamond hands. I'm on leverage ETF. Okay. I would love to talk to you about leverage ETFs. Hopefully you know about slippage. Holding like a champ. Well, you're going to be in the poorhouse because just the slippage is going to wipe you out. But again, it's not my wish. I hope you do well. But if you're holding like a champ leverage ETFs, even if the underlying goes up, your ETF may not go up. Those things are for daily trading purposes, not to buy and hold, unless you're in some sort of generational up move like Palantir and stuff like that. But I don't know you on Twitter, so my Twitter is in the show notes, so you can come follow me. We can have a discussion, or I can put the link up. We can have a discussion, whatever you like. And great, you're proud of your loss. So am I. At least you're talking about it. So 100K. What kind of drawdown is that of your account value? Is it 10%? I'm sure it's, I don't know. So why don't you put that up? Like you have $1 million account, you're down 100 grand. I have a 6-figure trading account. Like I'm down. I'm still green for the year, but barely. So, what's 100 grand to you mean? What does that mean, percentage wise? You have a 10 million account, you're down 100 grand. I don't know. Again, all these things that people put out, put the numbers out. Again, I don't know who you are, and I don't question you. But if you're posting your losses on X, great, do it. Um, but then your attitude about holding strong like a champ, diamond hands. I mean, what's going to happen if the market sells off another 10%? What's going to happen to those ETFs, leverage ETFs? And I don't know what you're in, so I can't question it. But maybe you bought those leverage ETFs on Oklo and Rigetti and Nvidia and Palantir and SoFi and all the right stocks that have gone up 20x, and you're down 100. Okay. But again, context is important. Anyway, anybody else? Anybody want to come on? So I got juiced up now. Actually, 11:30. How about Friday? How about we make a date on Friday? How about we make a date? We'll do a town hall. How about we do a town hall on Friday? I think I'm gonna do that. Let's do a town hall. Let's have some option sellers come on. Let's have some ETF holders come on. Let's have some diamond hands come on. Let's have some paper hands come on, and then we'll just have a community meeting. I think, I heard about that. I don't talk about politics. I did like her as a regulator myself. I do not like the mayor of New York City. So New York City is trying something new. I don't think he's going to do 10% of what he said he was going to do, because I don't think they're going to let him do it anyway. His mayor's, he's a mayor. He's not the governor. So, he has city council to deal with and this and that. Look, I can't be a socialist. I'm a capitalist. But I'm a fair capitalist. I'm not a vulture capitalist. Okay? But, I mean, there are some, to a certain degree, successful socialist countries, unlike Cuba, unlike Venezuela. In the Scandinavian countries, there are a couple of okay ones, like Norway and Sweden, right? There are some IKEAs from Sweden, massive multi-$100 billion company. Norway has probably one of the largest sovereign wealth funds because they have oil and gas and they don't squander the money. So they take care of their people. So in that case, maybe socialism. I don't know. But then look at the scale. Compare US to, I mean, is Norway as big as New York City? I don't think so. How many people are in Norway? I'm not sure. China is communist. It's not socialist. China is completely rigged. The government runs everything in China. In Norway, government doesn't run everything. Like in Cuba, government runs everything. In Venezuela, government runs everything. Those are not even socialist, actually. The pure socialist country in my book is Norway, Sweden, maybe Denmark, maybe. I mean, look, there's levels of socialism. China is not socialist. No. You have zero freedom in China. Am I concerned? No, not at the moment. No, because I mean, you have to look at the dollar yen exchange rate. It's nowhere near. Like I think at 140, then I'll be concerned, but we're nowhere near it. We're like 152, 153. So that has a lot to do with the currency exchange rate. Although interest rates have skyrocketed. Talk about interest rates. Our interest rates are going higher since the Fed cut the rates, by the way. So mortgages are back to 6.5%, 7%. But we can talk about all the stuff on Friday. I'll be back. And much love to you all. Stay healthy. I put it out the way I see it. You don't have to agree with me, but buyer beware. And if you're in the Diamond Hands group, I wish you the best. You had a great 3 years. And if you don't, there's the reverse side of the coin, and that's painful. I've seen many of these. No problem, Mojo. Anytime. You're welcome anytime. Hopefully you learn, though, right? So we all learn from our mistakes. Anyway, may all your longs skyrocket. May all your shorts tank. I will see my members at 4:30 Pacific, and then I will see the rest of you on Friday at Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Put a thumbs up. My manager says algorithm likes it. Share. and go subscribe to my newsletter on the website, free. You get one every Monday. I think it's great. Oh, that's a good topic for Friday. I don't think that's going to happen. I don't think they can do the 2,000 tariff checks until the Supreme Court decides if tariffs are valid or not. And I did listen to the arguments in front of the Supreme Court. It did kind of look like that they were not going to support Trump on that one. They're questioning their line of questioning, but things will change. I don't know. It's more boost. That's better for Bitcoin. More money in the system. Great. Let them do it. Let them do it. Well, I'll talk more in detail about that on Friday. Good idea. Great topic idea. Yeah, I don't think, that's just, it's like Trump's way of like stopping the bleeding, because when the market goes down, like over the weekend, there's, government suddenly opened up and deals were cut and shit like that. You know what I mean? So we'll talk about that. I mean, look, I don't know everything about it, but I have my opinion about it. I'm free to talk about it. So I will do that on Friday. Again, $2,000 on a consumer that's so stretched on credit card debt, I don't think it's going to make that much of a difference. Now, if it's $2,000 a month, that's a different story. But one-time $2,000 payment, I don't think it's going to. I think the bigger deal in this that we're not talking about, which actually we should talk about the positive on this, is the America credit, right? For every newborn, $1,000. When is that kicking in? I think that's an amazing, amazing, wonderful idea. Just put that money in like a untouchable Robinhood account and start, investing. By the time they're, I think that's a wonderful idea. Like, Trump has done some good things. No tax on tips, I think it's a good idea. No tax on overtime, I think is a great idea. Look, they have some good things, but then this government thing, we'll talk about that on Friday too. This government thing hurt the average American a lot more than they think it didn't. It did. And I didn't miss the government, to be honest with you folks, at all. But there are people who are in need, who need this, and you have to understand that. That's why I'm a fair capitalist, not a vulture capitalist. So, but yeah, we'll talk about it. These are all good topics. Let's talk about it on Friday. All right, I'm going to end it here. Let's see what color hat I'm wearing: green, red, or black on Friday. I don't know. I'm entertaining myself. All right, thumbs up. Much love. See you guys on Friday.